In this video, I'm going to be breaking down the one strategy that took me from an unprofitable trader to a profitable trader. I've been trading for 5 years now, and I've tried every strategy that you can think of. I went through the cycle of blowing accounts on repeat. I've traded every pair you can think of on every time frame that's available. And I can honestly say that this one strategy that I'm about to share with you is the only reason I'm profitable today. And it's how I generated just over $28,000 this week. So without further ado, let's get into it. So the strategy that we use is called time-based power of three. And it's made up of 3 phases: accumulation, manipulation, and distribution. And it's time-based because we only trade the open of a new 4-hour candle. So let me explain. The first phase is accumulation. So we have equal highs and equal lows, which forms this compression on a 4-hour candle. We have a small top wick, a small body, and a small bottom wick. All we're doing is we're waiting for price to manipulate to the top side or manipulate to the bottom side. And often this comes from, or often we target an untouched 15-minute fair value gap. So 15-minute fair value gap right there. In this case, price is going to manipulate to the top side, and generally we'll be looking for specific reversal signals within this zone, which will be explained in the next section of the video. But once price starts manipulating, we create the top side of this 4-hour candle. So the whole body now has been formed once we've manipulated and respected this 15-minute fair value gap. And also, it'll create the top side of this wick. From there, price then distributes, taking out the accumulation lows, causing this 4-hour candle to then put in the bottom side of the candle, like this, along with its wick. And the 4-hour candle will do something like this, bringing the body back up. So that's the fundamentals of how a 4-hour candle is formed on a lower time frame. Accumulation, manipulation into a 15-minute fair value gap. We see a reversal, often by an IFVG on the 1 minute or the 5 minute. Then it distributes, taking out the lows, and then it starts to accumulate before the next 4-hour candle starts. Okay, this is how you use time-based PO3, and this is a bullish example. So we identify where our new 4-hour candle is starting, and even before that happens, the first thing that we need to do is mark out any untouched 15-minute fair value gaps. Over here, this is the most recent untouched fair value gap. Below us, what do we have? We'd mark out this 15-minute fair value gap. And these are 2 areas of liquidity that would be interested in. Also, we can see that price has been moving down and it's starting to consolidate in this little range at the 4-hour candle open. So this is what we classify as accumulation in this zone right here. Classic accumulation. What we want to see is, will price manipulate above this zone up into a 15-minute fair value gap, or is it going to manipulate down below into a 15-minute fair value gap? So we'll see. Okay, price has come down into this gap, right? Generally, when we have identified the accumulation and the manipulation, we'd drop it down into a 5-minute time frame for a more accurate entry. we can see that it's completely disrespected this 15-minute fair value gap. So we actually don't want to target this. What's below it? So this is the area of interest. We'll mark that out. And as you can see, we've had a really strong reaction here. So we've identified our accumulation. We have manipulated below the manipulation low. We'll mark out this manipulation in a red box. Now, once we've seen this and we've seen a strong respect of the 15-minute fair value gap, we would be anticipating a move to take out the accumulation high, or at the best scenario, we want to target the 15-minute fair value gap. That's above the accumulation zone. So we drop back down onto a 5-minute time frame. And our entry model, it's around a 5-minute IFVG and a bullish engulfing fair value gap. So you can already see right here, we've created a 5-minute IFVG. Mark it out right here. Then we've created a bullish engulfing fair value gap, which will be our zone that we target to enter. All right, perfect. So now we have our entry model set right here. What we'd want to do is target longs. So if price comes back into this zone, that's our entry. We want to be targeting at least the top of the accumulation range or into this 15-minute fair value gap. Our stop loss goes just below that recent low, and we'll see how this plays out. Boom, take profit. So that's the fundamentals of the time-based power of three in a bullish case scenario. So this is a bearish case scenario of time-based PO3. So as you can see, we're clearly trending down. We have a new 4-hour candle just opening right now. So first things first, we'll mark out the 15-minute FVGs. We have one that's untouched just above us, and we have this one just below. Okay, so they're marked out. We'll drop it down onto a 5-minute time frame, and we'll let price form, and we've identified right there that is a classic sign of accumulation. We mark that out. And prices immediately started to manipulate above the accumulation zone high and into this 15-minute fair value gap. So we'll drop it down onto a 1-minute time frame and have a closer look. On the 1-minute time frame, we have this gap here, which we'd want to see inverted. So let price develop a little further. All right, perfect. This is exactly what we need to see for our entry model. We've created this 1-minute IFVG, and it's followed by a 1-minute bearish fair value gap. That's all of our requirements that we need in order to take this trade. So we place our entry at that fair value gap, and stop loss is just above the most recent high. To be conservative, we could target the low of the accumulation range, or since we know that we are down in a downtrend, we can take out these lows over here. And it's about a 4R. So risk 1,000, make 4,000. Now let's see how this plays out. All right, boom. Price just tagged us in right there. Boom, right there, full take profit. Okay, so that's pretty much the fundamentals of the time-based BO3 in a bearish case scenario.